Well, it's the longest stretch of consecutive daily declines since December 2007, the beginning of the GFC 17 years ago. The All Ordinaries Index lost 7.3% in a week that time. This losing streak only adds up to 2.8% so far. It's mainly about mining stocks because of the weakness of the Chinese economy. Banks have been going up, in fact. Meanwhile, the US market has not fallen 7 days in a row because it's mainly about tech stocks over there, and they haven't fallen at all. Australian shares doing worse than American ones is hardly unusual, is it? Here's a chart of the Australian All Ordinaries divided by the S&P 500 in New York. Words are not needed. Mind you, a few things are suggesting that the US market is riding for a fall. Here's one of them. Corporate executives are getting out. Sales by company insiders are at a record high. Today's fall on the Aussie market was 0.7%, with the big mining stocks in the lead as usual, and banks rising. The US market was steady on Friday, with tech stocks on Nasdaq closing a bit higher. Iron ore, gold and metals prices all fell on commodity markets over the weekend, while the oil price rose. And the Aussie dollar is a smidgen higher tonight at 63.7 US cents. And finally, here's a graph of the number of global interest rate cuts over the previous 3 months. It's at 62, not quite at the level of the early pandemic and GFC, but not far off. Treasurer Jim Chalmers today announced the people who will be on the new Monetary Policy Board to manage the Reserve Bank of Australia's interest rates, and they've got some catching up to do. And that's finance.